Hi, this is Grant Rubin, Principal of Low Market in Port Melbourne. Today I want to give you a quick update on what is happening with interest rates and the way banks assess your loan affordability. You might have recently read in the press, heard on the radio how APRA, which is the bank regulator, they've looked at what banks are using in their assessment. Historically, the banks have used 7 to 8%, and when you compare that to the actual interest rate of 3.5% to 4%, it just doesn't make sense. So what APRA has come out and said is, we're going to allow the banks to reduce the interest rate that they use in their calculators to assess your loan affordability. The initial discussion or talk is that they will allow the banks to adopt a rate of around 2.5% above what actual is. So if your owner-occupied home loan rate is, say, 3.5%, which is after the recent rate cuts, and we add 2.5%, the bank will be assessing your affordability on 6%. If we compare that to what it was at 7 to 8% historically, we're going to see your affordability increasing. Your borrowing capacity might increase by $100,000, $150,000, just depending on your circumstances, household expenditure, income, etc. Right now, APRA's announced what they're going to allow the banks to do. What we haven't seen yet is what the banks will do. I would expect over the next 2 weeks this to take shape, and we will soon be able to assist you in reviewing your borrowing capacity. So if you're thinking about renovating, maybe upgrading your house, consolidating some debt, refinancing, but just felt that you weren't able to do this in the last 6 months, now or in the next couple of weeks, maybe that opportunity for us to, review your borrowing capacity. So if you would like to take up that opportunity, please don't hesitate to contact our office on 9940 2608, and we welcome the opportunity to sit down with you and have a chat. Thank you.